Hi traders, welcome to this update on the euro dollar and pound dollar. We're going to take a look at both currency pairs, what we can expect in July 2022 basically. So let's get started with euro dollar first of all. Euro dollar is going sideways, made a triple bottom here at the low about 103.50 and is very corrective in its pattern. I was looking for last month in beginning of June for some type of correction, basically looking for an ABC pattern, if I remember correctly, and thought that this was a wave A with 5 waves in that pattern, and expected an ABC back towards the 61.8 fib, and then the bounce back up again. Now that didn't happen. We did get an ABC down, I should say, yes, because we had a rejection here and here. So that was a wave B, indeed, right here. And this was a wave A, and we did get a wave C. So that part was correct. Only the wave C went further and deeper than my target. So the target went all the way to the previous bottom and made a double bottom. So the extent of the wave C was further, was way deeper than the 61.8 fib, and went all the way down to here. So anyone who managed to hang on further would have gotten more profits of that wave C. There was no kind of reversal candlestick pattern at the 61.8 fib. So from my point of view, no valid entry there at least. But if anyone did trade at that fib, then yeah, that would have been a loss, obviously, because price went through that fib. Trading the 88.6 fib would have been certainly, in my view, a lot of sense because there was a reaction to that fib. You can see here. But ultimately got another lower low before we saw a bigger retracement. That retracement took a little bit of shape of a rising wedge kind of reversal chart pattern. So that reversal chart pattern is not, of course, good for the bulls. A rising wedge is a reversal pattern, so that indicates that the bulls are losing control. And we did see the break of that and a further move down to challenge again the bottom, and we saw a bounce at the bottom, indicating a triple bottom in the meantime. This whole pattern is a little bit tricky, it's a little bit complicated, because of this particular part in its movement, in my view. But if we step back and take a look at the daily chart, I still think we're looking at a bigger ABC pattern or some complex pattern in any case. I think we're still looking at maybe a WXY, for instance, or just an ABC, that this is an A, this is a B, and we're going up for a wave C. So in that wave C, if we get a 5-wave pattern, it's probably wave C. If we get a 3-wave pattern, it's maybe more of a WXY with an ABC, ABC, and an ABC in it, for instance. So I think we are looking at quite strong support with the triple bottom, and I think that price will probably make it up to the previous tops here in the 23.6 fib again. And if it pushes above that, it could go all the way up to the 38.2 fib. If we get a strong bounce here, then it's probably a WXY. If we get a follow through, then it's probably an ABC, and then the 38.2 fib could be the reversal spot, and basically the downtrend could continue from either of these two fibs in my view. If we step back again to the weekly chart, we'll see why I'm bearish, because it's probably looking like a wave 1, 2, 3, and this could be a wave 4. The waves 4 typically respect the shallow Fibonacci retracement levels, so that's why I'm expecting one of these two to be a bouncing spot and a reversal moment for that downtrend to continue. Max 50 fib, I don't think that is typical, and for wave 4, so not expecting that. One of these two fibs is the most likely candidate and target for the upside, and a potential turning spot for the downside. And with a target of the downside anywhere around parity would be the most natural target, but even 102.50 could be a strong level and a potential target as well. So that's it from my point of view. If price is on the lower time frames, is already breaking through this trend line here, making kind of a higher high and higher low already. So I think that if it makes some kind of bear flag pattern on this time frames and it breaks that bear flag pattern, that could be a good way of catching this breakout to the upside towards that 23 or 38.2 fib, and that could be a good moment to take that counter trend trade up to 107.50 and perhaps even as high as 110.50, 108. Okay, so that could be a breakout to the upside. Downside, I don't see much unless it reaches those fibs as I mentioned, or breaks these bottoms, a triple bottom. By any chance, of course, that would change perspectives. Pound USD is looking pretty bearish. The long-term wave analysis I'd shared in my wave analysis today, you can check that out at elitecurrency.com as well. I also share Bitcoin analysis and my gold wave analysis, Elliott Wave analysis, in that video. Pound USD long-term analysis is there too, and it looks like a big ABC pattern of a wave 4, and now we're going down for wave 5. So I think from that perspective, in that wave 5, we might have had a wave 1, 2, and this is a wave 3. We're either in an ongoing wave 3, or maybe the wave 3 finished, and we're now going to be retracing into wave 4. So from that perspective, if we get a break probably above the daily highs and maybe above a trend line like that, that's maybe too creative, but let me zoom out a little bit. Let's connect these maybe. There's a resistance zone certainly around this level, so not a good moment right here for any upside. But I think that if it shows some potential push and a flag and then a break continuation, basically, that it could be a good moment for a retracement as well. We have some signals that the retracement could come. We have a big time pattern here, a lot of days not breaking for a new low. We have some wick here, challenge of the bottom and a bounce. So I think if price manages to break above the resistance at 120, 175, 122, there could be a bigger retracement to the 23.6 fib at 123.35, and then maybe 125, 125.87. But eventually, after this pattern finishes, a downtrend continuation is expected. And it could push down to 115, 117.50, of course, a quarter level as well. It could be an important target. And then continue for wave 5 to finish a bigger wave 3. Then there will be another wave 4 and probably another push lower for wave 5 down to 110 and even as low as 108 or maybe even 102.50. And that would then complete a bigger ABC pattern. Let's zoom out to the monthly chart. This is a wave A, a B, and that concludes a wave C with a wave 1, 2, 3, 4, 5, a blue 5 within red C. And of course, within blue 5, we're looking at some type of 1, 2, 3, 4, 5, a 5 there for that downtrend continuation. Okay, so that's my view at least. But for the moment, a retracement is likely, a shallow retracement in my view, to kind of expand this corrective pattern before eventually later in July, I think, or August, a downtrend could continue. It depends a little bit on the patterns that emerge. Probably this month, I would say. Let's take a look at, yeah, because if it's a wave 1, 2, I think it fits within a monthly time frame. This wave 4, it doesn't look like it should be bigger than that. This wave 4 should probably not be bigger. Eventually, there will be a retracement that is big enough. Maybe after it reaches, this low, there could be a wave 4 that takes longer than an intra-month and could last several months before it makes another push down within that wave C.